All right, good morning, everyone. Once again, Thursday, April 9th, 2026. Great to have everybody with us today. Let's see what Mr. Market has in store for us. Before we get going, again, industry regulations require me, as you all know, to show the disclaimers. NFA Compliance Rule 2-29C, subparagraph 1. All it states is trade with money you can afford to risk capital. Past performance not indicative of future results. All right, get that out of the way. All right, so today let's take a look. Uh, of course, we had that strong gap up on the ceasefire. Um, and then pretty much yesterday, though yesterday was a cycle day one yesterday, it pretty much acted as if it was a cycle day two, meaning more of an MATD type rhythm, right? Following a trend move. And again, we could consider this strong gap up here, right? A trend move. And then as the day unfolded, again, capped up around the 68.47s, rotated down to uh, the 67.80s. I believe yesterday I had the 67.73, 75s as a core line in the sand. All right, so we stayed within those parameters. I did have 68, I believe on the upside, 25s, 30s area. So pretty much stayed within the boundaries that we laid out yesterday. All right, so coming into today, today is an official cycle day two. And again, as you can see during the overnight activity, pretty well contained rotation, somewhat of a narrow, relatively narrow rotation, still within those parameters outlined yesterday. All right, um, so what kind of needs to happen here, right? So of course for the bullish, perspective, again, barring any news, again, what we're going to get perhaps uh, my spidey sense tells me that we're going to get kind of a off again, on again type of news flow. Ceasefire is on, ceasefire is off. The strait is closed, the strait is open. It's like that commercial with the, clap on, clap off. Right? On again, off again. So my spidey sense tells me that we're probably going to get that type of news flow over the next, several days. So any of those type of headline risk, can cause kind of, snappy action. So, but that given, that's a given that the type of markets we trade here, futures, right? I mean, that should be part of the landscape, the expectation landscape. So nothing new to us there. So that said, we can't trade those type of things. In other words, we're never going to know when those are going to happen. They're just going to happen and the market's going to react. Right? The algorithms out there, the news algorithms are just, getting way faster than us. So bottom line is sometimes it will, you're in a position, sometimes it will work for you, and sometimes it may not work for you. It's just the way it goes, right? But in all cases, what should you have when you're trading? A stop order, right? Should always have a stop somewhere, even if it's a loose stop, kind of like a disaster stop. You should always have a stop order someplace, and to minimize any real damage that could unfold. So always keep that in mind. But once you have that and you accept a downside, then you have that covered. Once you have that covered, you can proceed normally. Right? I know I'm not going to blow my account out. You may also have, speaking of which, you may also have with your broker, if you have not done this, you may want to ask your broker, again, assuming that you work in your live account, you may ask your broker, um, create a downside risk limit. All right. In other words, if that downside risk limit gets hit, it locks you out for the day. Cannot trade anymore. I think most, if not all, futures brokers now have that. If you're trading a funding, the funders don't have that. But there are some third-party applications, I forget the name of them off the top. Maybe some of you know them, that you can actually uh, connect to your funding accounts and do the same thing. If it hits a certain limit, lock you out. Sierra Chart, I know, has its own built-in daily loss limit level that you can um, put in there. So again, all this is designed to manage your risk, manage your downside. Why? Because why do we want to be focusing on that? Because that is something we can control. So work with anything that you can control and then set those limits. If it's, $1,000 you don't want to lose in a day, or $200 or whatever it may be, put those limits in and then go ahead and trade normally. Say, okay, I'm not going to blow out my account. If I hit my daily loss limit, that locks me out for the day. I'm done. Go take a walk, go ride a bike, whatever. Okay, get away from the screens. Could be just the market is just, wacky that day and the trades are not working out. Or maybe it could be that, you're out of sync. Okay, or it just could be simply normal, rotations that trades are not playing out you know, as expected. Whatever the reason, protect yourself and then carry on as normal. Does that make sense to everybody? All right. So again, things we can manage. Make a list. What are some of the things that we can, that's within our control? Risk, trade types, how to manage a good winning trade, that's unfolding, right? These things, right? Focus on things you can control, set your limits accordingly, and then at the end there's nothing beyond, once you've done that, there's nothing left to worry about. Now it's just a matter of, I'm going to wait for that trade opportunity. I'm going to sit there and wait however long it takes. Sit there and wait for that trade opportunity to present itself. And then I'm going to take the appropriate action. All right. So today being a cycle day 2, again, we are still anticipating some initial, MATD type rhythms, which during the overnight we've already seen. It's kind of this sideways kind of block, right? Okay, so one thing that I wanted to kind of show you here before we get really cranking here, on the D-level money box. Okay, so when we get a big gap up like this, obviously the D-level money box is going to take the full extension of that range. Okay, but there is something you can do. I mean, that may be, potentially out of bounds, right? So what you may want to do as an alternative when situations like this occur, when it's really wide like this, right? You may want to take the daily range, okay? So this is your high-low range throughout the day, yesterday, not counting, again, we're not counting that big gap up, all right? So what you want to do there is go to your tool, right? And then measure that. Okay, that range. So essentially what we're doing is we're just taking the range from effectively the RTH session or near to it. Okay. So now it's not the same D level money box as the widest range, right? It's a bit more, it's smaller, but it's still relevant. And then essentially what we're doing is we're taking the highest high, right, and the lowest low. But in this case, it's really the lowest low effectively from the RTH session. So that's kind of an alternate way. And then you can use this D level money box, all right, as a surrogate to the Globex money box, which really may be out of play for the most part, right? So what would that entail, right? So that would entail if price came up above the prior high, right? There's your D level here, right? There's your money box here that we just outlined, and then same thing down here, money box, all right, which is different than the big one, right? That encompasses that entire range. So make some adjustments accordingly. Say, hey, what would be if we use the RTH session, what would the D level money box levels be? All right, so you can outline that pretty easily. All right. Also, another way. So how about the last night's, or the Globex here tonight, or rather last night or into today, right? So you can do that. So let's take this high to this current low. Again, more of a dynamic D level money box, right? So then you can outline that. So that could be a more relevant, to start the day, right? Because overnight high, overnight low. If it pops above the overnight high up to these levels, right? Again, we have some other levels, that we just measured here, right? As well. So again, you tend to get sometimes these overlapping levels, right? And which may, correspond like this D level, this money box up here, again, you can see corresponds to that, kind of upper edge of the value zone. So that could be, a level where there could be some interest in there, if mark, price traded up there type of idea. All right. So again, just throwing some ideas out there, some ways to approach this, particularly when we get uh, some really, wide kind of dislocation range activity. So that could be a way of approaching it as well. So some ideas to carry forward and see if they work for you. All right, we'll get going here. Again, overnight, really narrow, really quiet for the uh, overall. And in terms of levels, we'll be looking for if we get a move up to the 810 area around the 22s. Again, we may be interested in looking for potential trade opportunity 21s, 22 area, so keep that in mind. And we are looking for some type of rotational action, all right, within the context of the current kind of value area. All right, let's have a good session, everybody. One trade, one step at a time. Be patient. And again, as always, have stops in place. And let's see if Mr. Market is good to us today. We can only do what we can do and let the probabilities and the markets offer the opportunities and see if we can get some good results. For you folks trading crude oil, you guys are short currently off the opening. looks to be around 99.23. And I think I have everything turned on, yeah. Fair amount of, there is a fair amount of range to move around, so we should be able to get some good rotation. As long as they don't jam it too hard, too fast, and they just run away with things. As they say, you got to be in it to win it. Probing is always authorized. Just be sure to trade within your context of your trade plan. All right. Generally, cycle day twos are somewhat quiet initially. So what would we be looking for, right? Again, market off our sandbox. We can always use the value high, value low as defaults edges. So if you're looking for a long, again, right now we do have kind of a long lean configuration with the MAs. If we're looking for a move higher, we'd want to get clear of the developing value high. All right, see and see that, right? Clear and convert. And then we will be then looking for, higher rotation, right? The failure to do that could get a rotation back down. So again, just right now, the current rotation lean, again, benefit to the longs for the moment, but that could change, of course, in an instant. So cycle day do tend to be, we're in flex mode. So you get your perma bears, you get your perma bulls. I'm a perma flex, right? I like to be more permaflex in my view. I'm not really a perma bear or a bull, but rather more permaflex that, kind of just let the market dictate the direction and impact and strength, and then we'll flex along with it. Okay, so just holding tight with that. All right. Yeah, they're trying to nibble their way up to see maybe they want to try to get some stops above. Trying to nibble their way up. All right. All right. Orders are placed for the opening range. Here's the opening range. Again, we're short of crude oil at the moment, and ESNQ orders are staged, but no triggers yet. All right, we're coming up for about the first 10 minutes. First, very quiet. So not much to talk about here. Probably going to have some dead air on this recording today, unless you want me to pull out my guitar and start singing and playing, but I don't think you want me to do that. All right, let's play some Rush. What do we have on the economic calendar today? I didn't even really check that today, honestly. What's today? Thursday? So nothing really. Yeah, that already came out. Okay. Uh, Yeah, nothing further. 30-year bond auction at 1. That's about it. CPI tomorrow, 8:30. I don't know. It might be a day we have to watch the Masters at Augusta. Could be one of those days. That's where we're going to be focusing our attention at this rate. John asks, did you say today you were having a powwow with Danny and Lauren to be broadcast to the group? No, not today. Danny and Lauren will be starting their segment next Wednesday, April 15, between 12 and 1:30. That's their slot, between 12 and 1:30 next, or on Wednesdays, but they start next Wednesday. My slot remains on Wednesdays. That won't change. So Wednesday mornings. And then my slot typically is from, kind of the opening till about 11, 11:15, 11:30. All right. So yeah, looking forward to their stuff. Looking forward to their stuff. Oh, kind of creeping up here a little bit. All right, all right, all right. All right, so we did get a little pullback off that 810 zone. If you grabbed it within the context of the zone, kind of very slow creeping, but ultimately played out. All right, so that's the 810 over here against that zone. All right, we have an A4 triggered here, long, a discount as well. So just, again, cycle day two rhythms playing out, really just kind of a move up to that 810 area we anticipated, kind of a rotation back down, pretty much still within the context of the sandbox that we outlined. It looked more familiar, look kind of more reminiscent of kind of a little stop kind of probe, trying to see how far they could extend, the move. right, so those the longs didn't play out on those. Not surprised. We still just get that rotational action. Oil's back over 100, yeah. All right, on the opening range ticket, all right, we got again crude oil got stopped on the short side. All right, NQ got stopped on the long side. It was still open on the ES, but again, this is your typical cycle day two, playground here, right? Cycle day twos tend to be, rotational up and down, all right, and kind of rangy, and not usually. Again, we get the opening ranges here, at least on the indexes, within the context of the prior session's range. That's usually not the greatest combination for a breakout play of the opening. Typically, it's just not a good look, because we don't have really any energy pushing outside of the prior range, so you get this kind of, move up, move down type of thing. It's usually easier to get stopped out. So if you're trading, opening range play on an inside open range structure, uh, there's a higher tendency to get stopped out, right? Because you just don't have the strong push, right? So anyway, just something to kind of keep in mind if you're playing open range. So really not surprised with the results here today on the opening, given that it's a cycle day two. And again, the expectation is for MATD, or market or morning after trend day, or basically two-way rhythms. All right, very good, very good. Anybody else have anything? That's, I don't know, not a whole lot to. Just the upper edge back to, so on a range type day like this, you can see, I mean, really the play is kind of reversion trades, right? Getting up to the upper edge and then looking for a reversion back to the middle, down below, reversion back to the middle, right? So outside in, meaning above and then back in, or below and then back in. So outside in type of pattern, or reversionary pattern to the middle, or reversion to the mean if somebody likes to use that terminology. What we briefed on earlier, again, just as a reminder, we were looking for maybe a move above, right, the value high area. And then we were looking for what? A CNC, right? Clearing converting. So we did clear above that value high, but we never converted it. Conversion would have meant come back and holding it and then moving back above, right, that first high. That's a clearing conversion, right? For those that are unfamiliar with that. Right. Otherwise, it's just really just kind of a little stop run, just a little probe to see what was above there. There was a little chunk of volume there, right there on the profile. You can see it a little bit better here. Little chunk of volume, but it really dramatically, as the price kind of pushed higher, it actually, the volume dropped off pretty heavily there. So not really a lot of support, in other words, upper support, buying interest above uh, roughly the 20s, 1920s. All right, so just a little push. And you can see it did get a 200 extreme. Now, in this case, the 200 extreme, it's not necessarily, what would, again, it's not one of those trend 200 XTs, but rather, again, it's at the upper edge of a volume profile. So that could maybe give us some clue as well. Maybe just not a lot of buying in there. And again, we would need to have seen that follow through. Did not get it. So as a result, you get the rotation back towards the middle point of control area, high volume notice, VWAP area. All right. Doesn't mean we can't break out again. Right. But again, same deal applies, right? You're going to need to get above these areas, right, and move, precipitously higher with some strong buying. All right. So that would be still the type of pattern you'd be looking for more of a clean breakout. Yeah. All right. Let me know if you have any questions, comments, or right now that's about it. Again, we're short of A4 now, just a little back and forth there on the Auto X on the A4 level. Did get stopped out on the first one. All right, we got first target on that. Little consolation, but you got the first target. All right, didn't get much more than that. Stops above that high on the higher side. We'll just leave it there. Uh, so we're not fully out of the woods yet, but again, we could easily get a rotation back up or down at this point. So um, All right, guys, I'm going to take a short break here. I will put the recording on pause so we don't miss too much. Well, actually, I'm going to leave it going. There may be a little bit of dead time on the recording here, about 5 minutes or so. All right, but I'm just going to come off mic, and then as soon as I get back, I'll come right back on mic. All right, carry on. Be back in a few minutes. All right, everybody, back with you. Let us know if the audio vis here is still good for everyone. Just took a short break, got some refreshments. Thumbs up on audio visual, anyone? Just want to make sure that it's still working. There you go. Thank you, Jimbo. Just want to make sure AV is still good. when I came back. All right, we're still kind of in this range bound. Again, we did get second target there on the A4. I'm going to bring my stop down to the break even level, or just under. And so that kind of helps the first stop out, kind of a scratch trade at this state, at this point on those two trades. So given the day type, we'll take a scratch trade uh, at this point all day long, right? With these type of rhythms. Again, knowing what type of rhythms, what type of day type we're expecting anyways, should help us determine the type of trade uh, that we're looking for, right? So if a range trade is not your bailiwick, this type of rhythm, then really you're taking, you're sitting sidelines. Remember, you have to trade what kind of rhythmic is still your best, okay? Yeah, so the question is, with price still about 50% off the low, does that usually we play discounts? Well, so in terms of a structure, like when, you're determining, high, low, midpoint as we frame out the market, if the market is above the 50% point, we're generally looking for longs around that 50 up to the high, okay? Um, Again, the structure of the day is going to matter. So today, you know, right now price is holding above mid, but given the day structure, it can easily rotate back below mid and still not have any negative effect on the overall structure, right? So again, with a balancing type day, range type day, right now anyways, with price above, kind of midpoint VWAP, yeah, the lean has been, right, from the early going, long side, right? But again, is always the but, right? Right? But with this, I mean, we have, here's the majority of the volume, right? So we can still, the price could still fill in the lower part of the profile. So if it rotates back down here and then fails to get back above, VWAP area, right? Again, the pressure could, shift to filling out the bottom half. Make sense? So it's not always a foregone conclusion that it's okay, we're above midpoint and it's going to go higher, but rather it's above midpoint structurally, we're using that as a reference. And so I'm going to be looking for, long plays. But again, as the market develops though, okay, so let's take a look here, right? Look at the A4 now, all right? The market is shifted, right? Slightly. I mean, within the context of the range. Okay. And we noticed earlier that price could not get above, right, that the 19s, 20s. And then the second attempt up here again failed once again. You see that? So now you see the moving averages, everything's flattening out. So got to keep that in mind. Remember, we're kind of trying to read the tea leaves. Yes, we have a range. Yes, the market has been above the midpoint, but it's not making any expansive progress. Okay. So yes, we could still be looking for longs to a point, but at some point you say, well, I'm not really even interested in longs. Maybe I'm interested in shorts on failures to push higher, even though prices is, still technically above the midpoint. Does that make sense? So again, now it's the idea about that flex mode that I was talking about, right? Being flexible. So what's the conditions? We're in kind of this range. Above the mid, yes, but not really making any progress and actually failed a couple times to push higher. What does that mean? Should it mean something? Okay. And so you had some attempts here, right? And then this one here, I'll point to this one. This one was yet kind of a third attempt to move above that value high. That failed. Then what happened right in here? So you get this kind of move down. At this stage, even though the market's kind of been oscillating back and forth, you kind of want to say there's a probably good chance we could maybe rotate down because they have tried to move up a few times with some failures. Okay, so that's what I mean about staying flexible, right? And and then taking out these lows here, which they just did right in here, okay, kind of is telling us that, well, you know, obviously resistance, resistance, and now we're taking out these lows. So this is where kind of things, start to move lower. Yeah, I know you do get it. I just wanted to kind of longer explanation, kind of reiterating that. All right. So, um, yeah, I think everybody does get that, but it's always good to verbalize it a bit more. Remember, at this point, I think for many of you, it's all about, it's not the mechanical part of it, it's the thought process a part of it, right? It's about, what is happening, how can, what's the interpretation of that? And then again, it's not, we're not, when none of us is going to get it 100%, right? But if you can get, 80, 85, 90% of that, then you can say, okay, then you can say, well, I'm willing to take a short now, even though it's a range, even though we're above midpoint, but I'm willing to take a short of, against the high, spots there. Now, I'm not interested in taking a short down here at these low edges. That's not what I'm saying, right? It would be up here against this high and maybe this one at the A4, all right, which actually we ended up taking there over here on the Auto X. All right, so that worked out there. So again, we did take a long, that got stopped, and then it flipped. It took a short, and that at this stage, it's paid for the long. And has the movement here changed anything from the read, the core read? No, we're still in range. We're still MATD, right? We're still within, the core sandbox, which is our value area, developing value area. We're still within that core sandbox. So effectively, nothing's changed. Though they're, a short trade from, the higher edge, but down to the lower edge, right? Um, Opportunity. So now what do the bears want to do? They want to take out this lower value, developing value area. They want to take this. What do they want to do? They want to see and see this. All right. Just the opposite of what the bulls were trying to do. They want to see this to the downside. And if they're successful, there is room, to go lower. So now we're looking at what? Roughly the 6805s plus or minus. So that's what we'd be looking for in terms of a break lower out of that value area. All right, so you may want to lean, on the little bounces up here. You may want to lean short, even for small probes. Yes, we're around the, the midpoint, the VWAP. I mean, again, we're not getting a directional push at this stage. We're just range bound. So prices could easily just move back and forth within the range. And that's why I was saying, if the range trade is not your bailiwick, and breakout directional moves are where you're gonna, do uh, have higher performance, then what you may want to do, and again, this is something I've always suggested over the years, is that you want to get experience trading range if it's not a core part of your plan. So what you can do is switch over to simulation mode, true simulation mode 101, and then play the edges, kind of work out like, hey, I want to get the experience trading ranges. I'm pretty solid on my breakout directional moves, first pullbacks, but ranges I don't really have that type of, skill set yet, that level of confidence. So how do you get that level of confidence? You got to practice it. All right. So that's the idea. So, again, going into simulation mode may be, the answer, to do that. 68, 20, 67, 92. Well, that is the overall range right now. All right, 68, 20 is up here. All right, and 92 is down here. But let's refine that a little bit more. Where has been the majority of the activity? It's in the value area. That's the sandbox, correct. That's why I have this, by the way, that's why I have the profile colored kind of like that orangey, sandy type of thing, right? Call it the sandbox, right? So that's really the core range at this moment. So we would want to see, bears would want to see below, what did I say, 6805s plus or minus, right? So you'd want to see a CNC there. If that were to break, what would be the target, right? Target would be 92s, the lows, overnight lows. Okay. So that could be again, we're talking scenarios, right? So what would be a scenario to the short side at this point? Dynamic scenario, right? So if you were to, if it again, now what we would want to see here. Okay, so now we laid it out. What we would want to see. I'm going to want to see. So you can see here, even at the edge here, the volume kind of cut off, right? At the lows on the profile. To really get kind of something going really excessively, we're going to want to see sellers really get aggressive, not just probe lower, but get aggressive, right? And there's probably buyers sitting around these levels because they've been buying them, right? So, and those that have been buying, they may want to defend. I mean, I'm just suppositions here, right? But I want to see perhaps maybe some increase in volume here that could maybe indicate that the market, wants to push lower. They keep probing, so that could be something to look for. Right? Doesn't have to have expansive volume, but that is something that we would like to, also see. So again, once again, probing. So here's the thing, right? That level would break. You got the couple bounces back up to the moving average is 89. So this is still area premium world. That would still be the best area to take an entry on the retracement back into that area. Okay. And if it is to break down, then taking a new short down here is kind of less uh, of a more favorable spot than it would be up back in the premium world, right? Again, if you can get an entry into those moving averages, that it's kind of gonna help you there. You're not out in the middle of nowhere. You're in a cluster of activity. It's always going to be the better locations when you're into those areas. Because if you were playing a breakdown here, if you're playing a breakdown here and you're short, well, this could become a PKB style trade, right? And then if you're trying to, If you're shorting here, right, looking for this to go lower, certainly can work, but it's a bit higher risk than if you were to short up here. You should be able to see the difference, right, pretty clearly. Right, so identifying that shift and then kind of getting aligned. Even if we're in this type of range, you can still kind of get in alignment, or for nothing more, understanding the structure of it and not doing anything if it's not part of your plan, but understanding it. So there should always be the market every day should always provide you some educational benefit. Even if you're not in a trade, you should really be getting some educational benefit out of it. And hopefully my guidance helps you along that line as well. All right. All right, we're at 10:30. We're into this for about an hour and 15. Again, lean right now is, as you can see, as everybody else can see, favors some lower, potentially lower levels. Lower level targets would be in the vicinity of moving back down to the overnight low. So what do we call those? So roughly 90, 92s, 95s, right? Plus minus. Okay. Um, if the powers that be want to do that. Otherwise, that would be that scenario. The other alternate scenario, would be kind of a PKB, right? Look below, trap some people, right? And scoot it back up. You make the call on how you want to handle that, but that's the current. Right now, the lean still favors, bouncing and a little bounce and failure, maybe a bounce and failure again. What would negate this bounce and failure? What would negate it? You got to get back above that mid area here, about 12s. That would negate it, right? This current pivot. So the idea is, what's the current lean? What would be the continuation of that lean? And what would negate the lean? These are some of the core questions you should always be asking yourself when you're reviewing the price action. At what point would the lean, the current lean, whatever that is, be negated? What would need to happen? What would price need to do? All these questions need to be answered. And you can answer them. You can get to those answers, And again, not in terms of predictions, but planning. Yeah, hey, the lean is down. We're getting bounces and the bounces are getting sold. Though it's not breaking down hard yet, but the lean is still down. What would change that? Well, they'd have to get above the most recent upper pivots, right? So it means the buyers would have to continue to push and absorb all the sellers and then even push even more above those higher pivots. That would then negate the current patterns. So if you don't know these questions in your head, be sure to write these down. And then you put it onto your checklist. Until you have them in your head, asking yourself throughout the session, you got to write them down so you remember them. All right, so a premium did trigger off here on this, and we're still working the A4 on the short side over there on the other screen, on the other chart. And when you're framing out a range like this, or any range, you want to start with the widest. So Ram was saying down to the 92s, and yes, that is the range, the high-low range. But then within that broader range, are you able to define an inner range? So today we're able to find a bit more of an inner range within the context of the wider range. Same thing as like having that tops down approach, and then you drill it down into each time frame subdivision. Oh, speaking of rush, right? Subdivisions. Gotta love Getty Lee. All right, so that's the idea. All right, so that's the good question. Hopefully this helps a little bit. And we're just kind of managing that. We're still short of the premium and get the A4. Now that we can move down the stop on the A4 a little bit lower, that kind of locks in that trade. All right, well, I'm going to stay on until we can get these trades completed. 10:35 right now. I'll stay on the recording until 11 or until these trades are complete, whichever comes first. All right, not a great day on the opening range plays here today. So for full transparency, we did get stopped out. We got a trifecta today, but it was to the wrong side. We got a trifecta stop out, so not too pleased about that, but that's okay. It is a cycle day two, and again, cycle day twos tend to be not too favorable on inside opening range plays. So we'll take that off the board for today, and we'll see what that brings for us tomorrow on the opening range. But all right, full transparency. We're all about transparency. Thank you, Mark. Thank you. All right. Yeah, great to see you, Mark. Great to hear from you as well. What flag is that? I can't really read it well. What country flag is that? India. Okay, great. Thanks. All right, Parikh. Thank you. All right, nice. Welcome. Yeah, the icons are real small on my screen, so it's very difficult to read that. But yeah, great to have you with us. All right. Yeah, not really getting much expansion to the downside there. All right, we just barely expanded the value area. Again, just kind of that just cycle day two balancing rhythms. We actually had that yesterday as well, and just kind of a continuation of that today. So we do have a positive 3-day cycle. Again, looking at the cycle charts here. Let me switch to those. Oops. There we go. All right. So we clearly, have exceeded 3-day cycle targets here. All right. Same thing down over here on the Nasdaq. So NAS on your left, ES on your right. And that's our current range right in here. So very narrow, relatively speaking. But obviously a very strong 3-day cycle already because with that ceasefire gap, no surprise there, I suppose. Just taking a look at the bigger picture though, it's kind of looking. Let's go to our multi-time frame chart and let's go over to the daily. So really just kind of backing up into kind of a congestion area, kind of in. Oops, let me just do this. Kind of in this vicinity, you know, right in kind of in here, kind of a congestion area there. So it's going to be interesting to see over the next, few days as these negotiations on again, off again, on again, off again, um, type of play with these negotiations and the ceasefire. Who knows what's going to happen there? All right, but if is a pullback, Okay, looking on the daily here, just since we're kind of chugging around here in a range, you want to be looking at, obviously this is what I would refer to as a control candle, which is a very wide range candle. So typically when we look at a control candle, again, we always frame out the high low, right, midpoint. So really you're kind of looking at the midpoint area, should the market pull back, and that would be, plus or minus around the 67, 60 area or so over the next couple days or into next week even. You see the 5-day EMA kind of, really moving higher. Then you get the 8 underneath it moving higher. So trajectory anyways. So the idea of moving averages also with kind of like this, what I like to do is, I, again, look at the slope and the trajectory of them. So that's the 5, 8, and 21 on the daily. So if you were to just extend those out, over the next few days, that's the trajectory. So a couple things can happen, right? EMAs can, if price stays up in this area, EMAs can come and reach up to price, or if price retraces, into the EMAs, which are upward sloping, then the expectation is those EMAs in those vicinities would be anticipated to offer some buy side, right, support on a pullback. Okay, so that's another way I kind of, when I look at EMAs, I kind of extend them out, into the future. It's not perfect, but it's, it kind of gives me an idea. And again, also using kind of the 50% rule of a candle. So again, that kind of leads us to somewhere around 67. Not prediction, just preparation. That if the market were to pull back, where could potential pullbacks find renewed buying on pullbacks? All right, then you can drill that down into your 240 minute. And again, what you'll find here, as we're drilling down even closer, again, that 6660 area comes into view again, as I just outlined, right in here. So if this was a pullback here, again, you can see those moving averages here. This is on the 240 minute now, but you're seeing the cluster of those other moving averages in that area as well. Okay, and then of course on our multi-time frame chart, we drill it down into 60 minute. Again, you can kind of refine that move even further. Okay. Do I teach basic strategies for pairs? No. Sorry about that. I don't really do pairs trading like that. Uh, so in terms of day counts, okay, we use what's called the 3-day cycle. Again, I'm getting a question on this. So we use in terms of what's called the 3-day cycle, and you can actually find a lot of information about that. I'll give you the URL on our website. One second. Parikh, check that one out. Check that URL. It's about the 3-day cycle on our website. There's some good information about, understanding what the 3-day cycle is and the various, day counts. Cycle day 2 today is we're mid-cycle. There's a 3 days, right? So we're mid-cycle, and we're still bullish on the cycle, even though cycle has actually exceeded the range targets where prices above those, but it can continue to expand. And so should it continue to expand from these levels, The next target zone is up in this region here. That would be 68, 64 plus or minus up to 94. So got a 30 handle range. All right, so this would be a target zone, right, based upon today's cycle day 2 metrics. All right, and that would be the same for the NQ over here. You can see that zone and up in that region. All right, but that will give you all the information you need relative to the 3-day cycle. We have a free document in there that you can download. So check that out. Yeah, somebody had suggested that to me a long, long time ago, that I should write a book on this stuff. Um, yeah, not really interested in writing a book, but actually, one of our members, he's not active with us on a daily basis, but anybody that's been a member here over the years is always a member, right? Anybody that's ever come through here over, since Polaris started is always a member. Um, yeah, yeah. But actually, one of our members, if some of you remember Smack It, I talk to Smack It, a couple times a month, and so this gentleman, he was with us for a number of years, and so he literally has 3 college-ruled multi-subject notebooks that he took notes while he was with us over the years he was with us. He took notes, and he calls it the PTG Bible. With a small b. Bible with a small b. But PTG Bible. And then he says he has all the what he refers to as Dubayisms, the isms, everything, all those little pearls of wisdom, he said, that I've embarked on him over the years. He has them written down. So he says to me, he says, it's going to be valuable one day. If it not already is, it's priceless. So I said, well, that's a nice compliment. Can you get a copy? Yeah, interesting. I don't know. I don't know if he'd, I mean, those are all his personal notes on everything. So I'm not so sure he'd want to release them, but it'd be interesting though. He did show me his, we were Zooming one day, and so he did show me, that he says, look, and he started flipping the pages. So it's true. It's a true story. Maybe he would show them to you, Ram, in a private skiff. That's how valuable he believes that they are. The only way you'd have to view them is in a skiff, secure facility. Uh, Anybody remember Smackett? His first name's Mark, but does anybody remember Smackett? I think some of you may. still keep in touch with him. All right. Well, not a whole lot here happening today. Again, we did get the stop trail out on the A4 over here in the top left. All right, so that was a stop out there. Again, we had a long, well, that was a stop trail, that is. It was still a good trade. But this was a stop on the long. This was a short. That played out better than the long, so we're net plus on that. Probably not by a whole lot, but net plus on that. And and yeah, just kind of sucking vapor fumes here for range. All right. So kind of a la PKB here, right? This kind of, dip below, grab some stops here. Doesn't seem like a lot of stops, but grab some stops there and then kind of moved right. What did we say that would negate it? Anybody remember? Right? What would negate the downside there? Getting back above that pivot level. Yeah, the pivot high, right? So now we can confirm that it's negated, right? I mean, that's the confirmation that this move potential to move down, right? That's negated. Now you can see that happening. I mean, that's the official, negation point, getting back above the pivot, right? But do you gotta kind of step it back a little bit, right? Even though that's the official negation point, what you also then want to do is start looking and say, okay, what would be some evidence of it beginning to go in that direction? Well, you got your low here, right? You got this low here, then you got this low, and then now you see this price here, this action right in here. You see the slope of those moving averages now on that side. You can see where the slope of it, things change, right? You can actually see some change right in here on the CCI, the oscillator, okay? So although this is the official negation point, right, level, the pivot, you want to start looking back and say, okay, that's the official one. What about the unofficial price action? What am I seeing that may begin to lead me to consider that the downside is no longer the viable play? What would you use there, right? Well, you got to, again, look at the slope of the moving averages here, right? I mean, it's not that difficult, right? But now you can see the slope of the moving averages have shifted there. You can also use CCI, right? So this was all below the zero line, and now you got to move above the zero line right there. So there's a shift, right? That's the beginning to unfold. And these shifts are not an event. It's not like one candle, one time bar that, okay, boom, that's the one. It's not. It's a progression. So you need to, this is the idea of, right? And then what do we have there in terms of, I know John down south, he likes this one, right? Look at that premium there, right? Now that premium failed. This one also failed as well, but this is the one I'm more interested in, right? This premium, right? What type of trade in our playbook would this pattern be? Typically, premiums are shorts, but in this case, we have bullish pattern. So this would be categorized as the BLT, right? The Barber Lopez trade. Okay, so that premium is actually would be considered a long versus a short in that configuration. So again, things to, as you're reading price, asking, again, it's asking the correct questions about what is happening, right? What's the slope of the moving averages here that we use, right? The slope here to this point is down. When did it begin to change? Right in here, in this area, right? So beginning to change. What is CCI doing? Is it above or below, right? Above or below the zero line, right? So that helps, indicate to us some momentum shift. So the Momo here, okay, is down, right? The Momo here, right, has shifted back up. And again, in a very micro sense, but we can still see it unfold. Now, maybe you didn't see it unfold. That's what we're going over right now. So again, being able to identify the collective action, particularly in a tick chart, it's not one bar. Unlike, a lot of people like using time bars, 1 minute, 2 minute, 3 minute, 5 minute. When you're using tick bars, it's not any single tick bar, and we're using 750s, that's going to make or break. It's the collection of them, it's the composite activity of them. We can actually see shifts unfolding on the tick time basis. Well, it's not even a time basis, but on the tick basis, uh, I think more efficiently than waiting for a time bar. You actually see the action within those time bars. So that can give us a much, much better or an earlier read on the dynamics within those time periods that something's changing. So that's kind of some of the skills that you want to, work on building. If you don't have them honed, we all need to work on those type of skills. Because as you build those skills, as you get more confident with them and proficient with them, then you're going to start seeing trades, opportunities that you probably didn't see before because you didn't have those skills. I mean, I can relate that to my own uh, guitar playing, right? I can learn chords, the structure of chords, right, and so forth. And, I can, in the early beginning, I can eventually, play some basic songs. But, as I get better and better and understand and practice, of course, which is vital, I have to develop certain skills, with my fingers, syncopation, a lot of things, syncing up, two hands, and everything that goes along with that. Okay. But as I built up that skill, that then provides me to broaden my, playing horizon to be able to play, you know, greater than just basic strumming songs. Now I'm getting into individual note picking, things like that. Some of you already know what I'm talking about since you play instruments as well, right? But it's that, building that skill, all right? Takes time, takes obviously effort, right? And hopefully enjoyment. I mean, the whole idea like playing guitar is playing, right? Playtime, not work time, playtime. You know, trading should be we're playing the game of trading, right? There's Steve. I knew Steve was gonna jump on there. Right? It should be playing trading, right? Playing the game. So again, we got to learn these skill sets, right? So reading price, changes in price action. I know it's a boring topic versus others, but again, if you kind of view it in a similar way, hopefully it makes sense. I mean, we want to build the skill set because as you build that skill set of like being able to read a shift in price, what is that going to open the door for you? Just as in music, as I'm using that as an analogy, that opens up a greater number of different songs that I want to learn because they require a higher skill set in order to play them, right? Steve knows exactly what I'm talking about, right? And Bruce, I think also, right? Bruce definitely knows, all right? And so with trading, it's the same idea. What's going to happen is you start building these price reading skills, you're going to start seeing trade opportunities that you didn't see before. Again, a higher level, right? To be able to advance. So all these things kind of to keep in mind, all right? So real good. All right, we got an A10 signal here. Let's move our stop down. So we got an A10 short on the left. We have an A4 long on the left. We got a discount here. These discounts and premiums are not working out today. Not really working out that well. Again, in this kind of the range type of choppy market. Yes, this is it's a 200 extreme. Again, the issue I was going to take with the 200 extremes, Rom, structurally it's a 200 extreme, yes, but it's not in a trending condition. Okay, see the difference there? Yeah. So again, just kind of bringing this into view. So there's your 200 extreme, discount extreme. This is part of the playbook. Here's your discount extreme. What type of condition do we have with that 200 extreme? We got a trend, get a directional move. Okay, so that this image here on a 200 extreme is the valid one that we want to consider, right? Okay, so that's it. Yeah, so Rom says, yep, I forgot. Well, that's why I'm here to remind you. All right. But yes, technically it's a 200 extreme. Mathematically, right? Algorithmically, it's 200 extreme, but it's not the right or the most favorable condition. We don't really have a trend, kind of a trend force in effect. All right. All right. I am going to come off in about 4 minutes. We've gone about a 1 hour and 55, close to it. And we're just really just kind of chugging back and forth within this range. We had some trades, but for the most part, the trades have kind of negated each other, longs and shorts, back and forth. So not really getting any forceful move in either direction. But I think we do have a good conversation today on, the idea of price structure and having some ideas of reading price structure with some of your questions and comments. Yeah, keep building those skills because what's going to happen is one day, when the market is really ripe to make a very good move, having, you know, identified a price structure in development, in shift. All it's going to take is one. You're going to say, oh, yeah, I see it developing. I'm going to go take that long, or I'm going to go take that short and position myself for the further unfolding. Okay. Yeah, these videos, I believe, will be posted to YouTube as well. So forever and ever and ever. All right. All right. All right. We got an A4 long. We got A10 short, which um, already got, again, we have one scale out on each. Where does it want to go? Got a tug of war here for direction. One side will win. But right now we get some trades on each side, but really not going anywhere, spinning wheels. All right. All right, I'm going to tighten up the stop on, actually we're going to bring up to break even. So the A4 is up at break even, and we're pretty much right at break even for the A10. Trying to let those play out. But overall, the same, I think, analysis applies in terms of looking for a breakout, right? Breakout above the value area high, right? Come back, hold it, right? Clear and convert, right? CNC, all right? That would open the door for higher, and vice versa here. They tried once, but if they were to come back down again and take out these lows, right? Failed to come back up, and then we could potentially see lower, right? But overall, market is still has a bid. So, you know, that's all what we have. Market still has a bid. All right, on the A4, a couple scales there going, so that's good there. And again, we have our stop in place on the A10, which would, if we get stopped out there, it's going to be a scratch. For the most part, it'll be a scratch. A4 will take care of that. You get the discount playing out here as well. So once these trades are done, we'll come off the board for the day. Yeah. So the A10 got stop trailed out. We got A4 still playing out. We got discount long over here on the right, playing out as well, getting close, and trying to get another push higher. All right, scale out of the discount. Again, it's doing its job. Well, we'll have to stay on for a bit longer then now. Can't stop the stream when things are going your way, right? All right, getting a good push now. Giddy up. All right, we're gonna move our stop up there. Move our stop trail up tighter there. And I think we're gonna get a push right up to right above that overnight high. And you know it's above the overnight high. All right, you got stops above the overnight high. All right, so price has cleared the value high, all right, the sandbox. So again, we're getting a good clearing, and um, I'd say we've pretty much converted it. So we should try to get that push higher above the overnight high now. And again, our second scale up is sitting right around that area, so that should we get a little push higher, we should get that second scale on the discount. Giddy up, giddy up. There we go. Come on. Come on, Seabiscuit. There you go. There's a second scale on the discount. And we're pushing higher now, the remainder on the A4. All right, I'm just going to bring my stop up a little bit. Keep managing that. Oh, I'm getting a battery low warning in my ear. That's not good. I'm gonna have to recharge my headset here in a moment. And if we get trailed out on this A4, then it will be the end of the stream. Oop, came close. All right, there it is. Scaled out of the A4. All right, we'll be closing the stream down here for today. And thank you for watching. Be sure to watch the replay if you get a chance. They'll be uploaded to the website a bit later today. And we will be back tomorrow at 9:30 or 9:15. All right, so thanks everybody. Have a good day.